Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? I just want to first acknowledge, I know there's a lot of people hitting me up, asking me about gold and silver. So I just want to answer you all at one time and just say, you're very welcome, of course. And I'm glad that you guys were able to get into gold and silver when it was a little bit cheaper. For those who are interested in buying gold and silver, make sure you go to our friends over there at Miles Franklin. You'll see the video here shortly. You can either give them a call or hit them up on email. But first, we're going to check out whether or not this is a gold and silver rally or is this something else. So let's get into this. Before we get started, do me a favor, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. If you're thinking about buying gold and silver, head on over to our friends at Miles Franklin. The link will be down below in the description. When you make your purchase, make sure you use promo code Pimpy, P-I-M-P-Y, and they'll take care of you. If you have any additional questions, you can reach us over here at this phone number or over here at this particular email. For all orders over $10,000, reach out by email and we'll make sure that you get a great deal. So come on over to Miles Franklin and add to your precious metal inventory. So here it is, right, what I was talking about. Make sure you call them right here at 844-874-6797. Tell them Pimpy sent you, or you can go ahead and email them if you have any questions. If you have any orders over $10,000, please use our email because we can get you a better deal. Okay, real quick into cryptos. Bitcoin is at $67,707. Ethereum is at $3,318. Solana is at $174.15. And XRP is still sitting around 58 cents. Dogecoin is at 17 cents. Cardano's at 57 cents. Avalanche $45.72. Shiba's at 4027. Polkadot's at $8.37. Chainlink's at $17.36. Polygon is at 88 cents. Litecoin's at $97.85. Oh yeah, look at this. It's now up $40 for the day. Gold is sitting at $2,349.10. Silver's up 35 cents today, sitting at $27.60. Oh yeah. We're going to shoot over here to Arcadia Economics. I'll leave the link for them down in the description. We're going to listen to what Ralphie has to say, whether we're in a gold and silver rally or is there something more. And if Ralphie looks a little spooky, just so you are aware, Ralphie lives over there in Israel. And there has been a lot of word coming around that Iran's getting ready to attack him. So I understand why he feels the way he does. So let's hope Ralphie and all his loved ones, as well as everybody else over there, are safe. We don't want no more deaths, no matter what side you're on.
And I don't want to sound like I'm ruining the party, and I hope I'm not, but there hasn't actually been a gold and silver rally. There has been a commodity rally, which explains why the miners, save for a few, including our sponsor, Fortuna Silver Mines, are not really that up. There's another question to ask: why haven't positive real yields brought gold and silver way down? Because that's what usually happens. And I'll show you a very simple chart that explains why it's not happening this time, because the real yields that are being paid are actually being paid out of totally unbacked dollars, meaning Federal Reserve losses. And so I'll show you why there has been no gold rally, no silver rally, but that is yet to come. And when it does, the miners will take a giant leap forward. I really shouldn't use that term. It sounds like Mao. They'll go up. The repo market broke $2 trillion on the quarter turn, and it's not going down. It's still about $1.95 trillion a day that are being shuffled between banks every night, and the money supply is still decreasing. And so the wall of monetary clog should get hit pretty soon, and when it does, the Fed will cut back to zero, which is what Jared Blickry, the only good guy on Yahoo Finance, is speculating might actually happen pretty soon. And I'll show you that article, and I'll show you the chart that shocked me. There is a metric by which silver is actually higher than it was in 1980, and believe it or not, it is actually true, which is just another piece in the puzzle that proves that silver is still money, even though it doesn't quite feel like it yet.
Oh, I don't know about that. If you guys have been collecting silver and you get a hold of one of those silver coins, you know what I'm talking about. There is nothing that feels quite as nice as holding a silver ounce in your hand. Now, I've held both gold and silver, and gold is beautiful in its own way, but silver coins, there's just something about them. They are awesome to have.
All right, the first chart we have today is a chart of caution. Open interest in silver futures is up to looks like a 3-year high. We haven't been this high in open interest, the amount of futures contracts open on the COMEX since mid-2021, with silver around $30. That is going to have to clear. I can't predict whether it will clear with the price going up or the price going down. If it clears and open interest falls and the price rises, that means we're in a little bit of a short squeeze. I can't guarantee that, so we got to be careful here. We're at this line here. I think it's 170,000 or 171,000. It says 166,823, but there's a 1-day lag here. So we've broken through this line over here, this bottom black line, and the top back in 2021 was still quite a ways where we are now. It's about 200,000 contracts. So there is room to move up here, but you got to be careful here and be careful of a sudden sell-off. So I would just say stay out of leverage right now in leverage silver vehicles. I don't think that will be good for your emotional balance, but technically speaking, there is some room to run here if we're going to go to those old highs in open interest around 200,000 contracts, which is pretty slim, but it's possible. And I wanted to address the question that was raised by Zero Hedge in an article on April 4th. I've screenshotted the homepage capture of it here. It says, gold's defiance of real yields can't last unless trouble brewing. Gold's surge to record highs is extraordinary, coming as it does in the face of elevated real yields that would normally bring it crashing down. And so I put another chart here of the Federal Reserve.
I think people are waking up to the fact that the dollar is going to die. When you see record amounts of gold going into the central banks, then you have a reason for caution. Listen to what Ralphie's about to say about the US dollar.
Losses, net losses versus the real interest rate. And you'll see what I'm getting at in a second. So this blue line is the Federal Reserve losses. You see here, this is actually the zero line if you look at the right axis here. So this is where zero Federal Reserve losses, and they were remitting all of their extra income to the Treasury as they had done since 2008. And here we start the Federal Reserve losses. Losses means they're printing dollars that are completely unbacked, not even by debt.
Remember I told you we are in a debt economy? We make our money off of people going into debt. So not only did we have currency that wasn't backed by anything but the faith and good promise of your government, but now he's saying it's not even backed by that.
As these losses accelerate, it means they're paying out interest of totally unbacked dollars. And this is precisely when interest rates, real interest rates, headed positive in real terms. So yes, interest rates are positive in real terms, meaning the yield in the 10-year is slightly higher than the inflation rate as they calculated, but that might be BS depending on what you actually buy. So this is really an artificial calculation, but let's just give it to them. So real interest rates are now positive, whatever that means precisely. But why are they positive? Because it's the Fed that's paying that interest and losing money. So the dollars that are being created to pay that interest are not backed by anything, and therefore gold and silver are still climbing. This is going to get worse because Federal Reserve losses are going to keep getting worse as they need to keep interest rates high until, of course, the next financial crisis, which is coming very soon to a theater near you, and we are the theater.
When our financial market and our economy looks the way it does, people start to wake up to just how corrupt those bankers are. And so they have to create some kind of situation, like a black swan event, a pandemic. They have to create something to distract everybody from what's going on while the markets rebound. And they usually rebound during crises like this. But people are waking up to this fact, and they're not falling for it anymore. And a lot of them are moving into gold and silver.
Get into why exactly there really has been no gold rally, even though it feels like there is. And I don't mean to be negative. I mean to be positive by saying that, because I mean to say that the gold and silver rally are still ahead of us, and this is really nothing. What this is a commodity rally, and here's the proof. This is the gold to the CRB ratio. The CRB is one of the oldest commodity indexes. We've had it since, I don't know, the 50s, 60s, 70s, one of those things. So we see here that we are at a major pivot point in the gold to CRB index, and we've only really climbed significantly above this ratio one time in the 2020 crisis, which is when gold was at its all-time high in real terms relative to other commodities. So we were at this level actually at the peak of the 2016 rally, not even at the peak of the 2016 rally, the beginning of the 2016 rally when gold blasted out of its 4-year bear market here, in nominal terms, at least in dollar terms. And we were at this same level in early 2020 before the lockdowns. And we were also at it here at the end of 2023. And we've been at these levels for all of 2024, basically. And we haven't broken above it yet. So what this is really a commodity rally. And I'll show you more evidence of that in a second.
Believe it or not, that's actually good news. You're about to see why. If gold and silver are running like they're doing, and we're not even in a rally yet, that means the best is yet to come.
I've put these convenient little labels here of what a silver rally looks like in real terms. And this has a lot to do with gold and silver miners, and I'll get to that in a second. So from April 2019 to April 2020, that was a huge silver rally in real terms, meaning silver was outperforming other commodities because people were worried about monetary disasters. And we had here a major high in July of 2020 with...
I like the fact that he said the one commodity that outshined them all was silver because people were worried about the monetary policy. If they were worried about it back then, what do you think is going to happen here in the near future when a dollar dies?
Really outperforming other commodities. And then from about July 2020 until July 2022, for 2 years, we had a major silver decline from 0.2 to about 0.06. That's a huge silver decline. And from there, since 2023, we've been pretty stable. It has not moved. We have not been in a silver rally at all for 2024. We've had a little bit of a bump here in this little pathetic candle. We have a long way to go. What we are in right now is a commodity rally. This is the CRB index. This was a major low in the CRB index at April 2020 during the lockdowns at 100. And we reached a high of 325 or 330 or whatever that is up there in 2022. And since then, the CRB has pretty much been going sideways until recently we made a new high at about 295, very close to 300. So we've been in a minor commodity rally, which includes gold and silver. Now, this is why mining stocks are not rallying so much. People have been asking me, why aren't the mining stocks really participating in this rally? And some of them are, and they have risen, but not really significantly. If you look over a 5-year period, it's not really that impressive, but it's going to become impressive when this ratio changes, when it actually goes up. So if we're going back here, the reason that mining stocks have not rallied so much is that if all commodities are rallying, then miner profits don't rise much or at all. If mining companies have to pay more to mine the silver or the gold out of the ground, then their profit margins won't go that much higher and the stocks won't perform that well. When gold and silver rally relative to other commodities, that's when mining stocks really outperform, meaning when people go after gold and silver, but not other commodities because they're worried about the money, that's when the metals really start to move and commodities don't go up as much, or maybe they even go down relative to gold and silver. And that's when the profit margins really start to move and gold mining stocks really outperform well. I want to go to the repo market for a second here. This chart, you see a black line and a blue line. Black line is the amount of volume in the repo market. We see here we hit an all-time high of $2.023 trillion on March 31st, 2024 on the quarter turn, which was expected. And here we have the security overnight financing rate, which is the repo rate, what banks charge each other to borrow and lend cash overnight. Here was the repocalypse over here. And we see, what do we see here? We see that the volume in the repo market does not go down until and unless the Fed cuts rates. And these are the basically the Fed rate. The repo rate is the overnight rate, more or less. It's not exactly the same, but it's pretty similar. So we see here that the repo volume, right, it reached a fever pitch over here, which was a record in 2019, right before the repocalypse. Then the Fed started cutting rates after the repocalypse, and that only then did volume fall in the repo market, and it started rising again because they kept rates steady here, and it hit a fever pitch over here, and then they cut rates again to zero, and this was the lockdown crisis, etc. And then the volume stayed pretty steady as rates stayed at zero, but then they started raising rates and then the repo volume started to spike. But the problem is the money supply is still shrinking. So this repo volume can't be sustained for much longer because dollars are running out and there aren't as many dollars in the system now as there were back here. So we're going to hit a brick wall over here. And when we do, they're going to have to cut down to zero in order to get this volume down because the dollars don't exist to sustain it. This is what I wanted to highlight. Powell's big headache right now is an economy that reaccelerates, meaning price inflation, that's what he's talking about, requiring further rate hikes. This is the so-called no landing scenario, right? Not hard landing, not soft landing. This is the no landing scenario. An economy that ran too hot and stayed there was the fate of Paul Volcker, who led the Fed in the late 1970s and early 1980s, which is when gold and silver made their moonshot. Volcker presided over a double dip recession as he tamped down inflation that at one point spiked to 15% annually. It would be supremely ironic, actually, it would be pretty likely, if the same fate befell Powell, forcing another round of uncountable rate hikes, just as rate cuts are on the horizon. Now, there's two things I wanted to emphasize here, is that first of all, rate hikes will make price inflation even worse because they will come at the expense of the Fed's earnings. And I've already showed you that when earnings get negative, real interest rates don't impact gold and silver prices, and gold and silver keep going up anyway. Second thing I want to mention is that Paul Volcker could theoretically and did get control of the situation because the debt was in principle payable back in 1979 and 1980. Now it is not. So there is no way that they can hike rates. Hiking rates will bring gold and silver even higher. And so the only move the Fed has from here is to go back to zero when the next financial crisis hits, which, in my opinion, though I could be wrong, will happen this year when the plumbing hits a wall.
So if you listen to what Rafi is saying, it almost appears for the Federal Reserve, damn if you do, damn if you don't. That's probably why we see so many Fed board members quitting. They must know something that we don't know. Gold and silver is very, very important. Everything has been artificially kept up, whether it's the stock market, whether it's cryptocurrencies. Now, I'm not saying there's not a time for you to make profit off cryptocurrencies, but you need to get in there and then get out. And with that profit, you need to turn it into gold and silver. It's your way of staying out of the system, protecting your wealth, protecting your family. Anyways, that's it for now. I'll catch you later. I'm out.